Hey, everybody. Welcome to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at EWOTrader.com. And if you've been with us for a while, you know what we do here. But if you are new to the channel, well, we talk stocks, but not just stocks. We talk about earnings announcements and how to profit around earnings announcements using options. So last week, we went over a whole slew of stocks, but this week, the week of March 31st, 2025, we find that this cycle of earnings season is winding down as we close out the month of March and enter into April. It's going to be a little quiet period, but by the second week of April, which is going to be the first full week of April, so next week, we have the start of the new earnings cycle, and the banks, financial sector, will kick us off late next week. So you'll want to come back next week to find out what's in store for the first round of earnings of the next earnings cycle. But hey, we still got some big names declaring this week, and we're going to get to them here in just a few moments. But you're going to want to hang out with us till the end because we have to review last week's trade, which is still an open position. And also, I have a new trade for you with an interesting name that you might want to stick around for. So let's get right to it. All right, because we talk about a lot of stocks here, we have a chapter feature at the bottom of our video, so you can skip ahead and find out a little information about the stocks. And again, we talk about stocks specific to their earnings announcements. We focus on how to profit using options, as I mentioned earlier. All right, so here's my list. I curate this each and every week, a little quiet here. And how I break this down is that we have real volatile stocks that are going to the market, not us, but the market anticipates is going to have a double-digit jump or decline in stock price. And then on the right-hand side, we have, and we call those breakout stocks, okay? And then on the right-hand side, we talk about consolidation stocks that just don't move very much through their earnings announcements. These are usually really mature companies. They've been around a long time. All right, so let's begin with the quiet stocks. Let's take a deeper dive into those. And I'm going to show you an example of a quiet stock here. This company does not have earnings this week. This is just an example. This is Pfizer. All right, they have earnings announcements that just where the stock just doesn't move. And we call this a quiet stock. Usually it'll just move single digits. And you can see here that Pfizer usually moves around 4 to 5%. Through their earnings announcements, and being a $20-something stock, it just doesn't move very much. So there's a specific strategy or strategies that we use to profit from these earnings announcements, and some things that happen with options where we can make money with the stock not even moving. All right, so let's take a deep dive into our list this week. Again, we're on the back end of earnings. We're not looking at very many stocks. I think this week there's only 130 some odd stocks declaring earnings. And of those 134, I'm only looking at 16 that meet my criteria. Okay. And that deals with option volatility, open interest, and really the bid-ask spreads. Okay. Making sure that we can get in and get out of our positions. So as we look at our quiet list, let's jump over to the charts real quick. And we're going to start with PVH. Now, if you're not familiar with PVH, you may be when you know who they own. This company owns Tommy Hilfiger brands and Calvin Klein and some other well-known names in that sector. And that's the holding company, PVH. They are going to declare earnings today. Monday, March 31st, after market close. And they're going to have, this is a $65 stock, roughly $64.32 is, I believe, the current quote on the stock. And the move is going to be a little less than 8%. So single digits, but a little bit of volatility through the earnings announcements, but not much. So for this company, what we would want to do is sell premium. Now, that means sell calls and sell puts, but we don't do it naked. We use strategies like iron condors and condors to bring in premium through the earnings announcement, because after that earnings announcement, that implied volatility drops, and that's how we make money from these types of strategies. Okay, so PVH Corp has earnings today after market close, and we will see how they do. How Tommy and Calvin are hanging in there. All right. And so next on our quiet list is going to be Basset Furniture. Now, this stock, boy, you notice when I pull the stock up, look at my stock chart, it jumps to 25-cent intervals. You talk about a stock that just is not very exciting. This stock is a $15 stock. All right. And look at how quiet this stock is all the time. I mean, it just doesn't move. And that includes earnings. All right. But one thing that does move is the option premium going into earnings, that anticipation of, is there going to be a big hit or is there going to be a big miss on the expected earnings results? Okay. And here, Basset Furniture will have earnings on Wednesday, April 2nd, after market close. The estimated move here is less than 6%. All right. So not a big move. So it's important to use the right strategy. And I'll talk more about that here in just a moment. Okay. But again, anything we can sell premiums with, like butterflies, iron condors, maybe even condors, that's the type of strategy that we would look for. Okay. And see if there's an opportunity there. All right. Now, a consistent stock that appears on our list through earnings is ConAgra. Okay. And this is the last of our quiet stocks this week. Now, ConAgra will have earnings on Thursday, April 3rd, before market open. So early in the morning. The expected move here is less than 6%. And you'll notice here that the last earnings cycle, look at this, just a little bit of a drop the day after earnings, and the expected move back then in December was 7%. And it's because of that consistent quiet cycle of earnings performance of the stock that these numbers will fluctuate. And it's how the option market makers are pricing the options and what their expectations are going into the announcement. So now you can see it was 7%. Less than 7% in December. Now it's less than 6%. So again, expecting, doesn't always happen, but expecting a very quiet earnings cycle for ConAgra. All right. Now this is a $26 stock. So it may be a little tough to sell premium, but you want to make sure you're always hedged. So never sell premium naked. Always do something like an iron condor, which is a call vertical spread, selling a call vertical spread and selling a put vertical spread combined together. That's all that is. All right. So that's it for the quiet stocks. And listen, if you are, if you're liking what we're providing here, be sure to like and subscribe to our channel, because that is what helps us get the word out and get to more traders like you. And we want to reach as many people as possible, because this is how we make money trading options, and especially with the strategy I'm about to show you next. All right. As we get into our big breakout stocks, let's take a look at the list here real quick. And we're going to take a look at our breakout candidates. Now, the strategy for these is totally different. These are stocks where we look for straddles and strangles. These are two basic strategies. They're some of the first strategies you learn about when you start trading options. But most people have trouble with those two strategies because they are not trading them around the right stocks that have the potential for movement. And one consistent event around all stocks are these quarterly earnings announcements. Okay. And that is where we find these breakout candidates, and these are perfect for straddles and strangles. Yes, we are buying volatility sometimes where that is a bit inflated, but it's because that price, and that price, they think that stock is going to move. So let's talk about some examples. We have a couple of familiar names here that you might not be familiar with, but you may have heard when you know what they are. Now, one that I really wasn't familiar with. Let's start with Encino. Okay, I just like how they spell their name. Small n, then capital C, INO. So I thought, it's a breakout candidate as we look at the chart here. The expected move here is greater than 15%. All right, so they expect the stock to really be a mover. Let's see if we have, yeah, there's the last, I don't have it marked, but here's the last earnings date right there. And you can see the big gap down around that earning event back in December. Big gap down for Encino, and they are expecting that again. Boy, gap down is trading lower today by 3.5% on a day where the S&P was down big early and is actually making a rally. Look at that. It's in green up there at the top of my quote list on the right-hand side. It just went positive as we were talking. Man, my goodness, what a rally. What a nice rally for the broader markets. All right, so Encino, they will have earnings tomorrow, Tuesday, April 1st. This will be no April Fools. It'll be after market close, and we expect a big move greater than 15%. Now, another stock that you may be familiar with but not recognize the name, this is RH Holdings, okay, also known as Restoration Hardware, okay? Now, most people are familiar with Restoration Hardware, but this is typically a big mover. They will have earnings on Wednesday, April 2nd, after market close. The expected move here is greater than 18%. All right. Now, as you can see, this is currently a $235 stock. All right. The trouble here is a straddle or strangle on this stock because of the price. It's going to be expensive. It's going to be $2,000 to $3,000. So this would be appropriate only for larger accounts, say something over $50,000. Depending on the debit, in this case, $2,000 to $3,000, we're looking probably at $75,000 or more, but not for smaller accounts, say a typical $10,000 trading account. That would be not appropriate. RH would be something fun to just watch, but not to commit that type of money to a small account, just because the potential that the stock might not move that much. What if you're paying for a stock to move 18%? But maybe it only moves 4% through that earnings. That happens, okay? And you don't want to do that with a smaller account. All right, so if we go back, you can see around some of these earnings announcements. This is an earnings announcement right here. Boy, that was scary on Friday the 13th. All right, back in September, big gap up, and then another gap following day. This is in December, of course. Moved down on the day of earnings, and then big gap up. And then look at this sell-off from a $450 stock down to $235 as a low. And this line that I have down here is a long-term support line, technical. Okay, you can see the bottoms here, and it connects even previously to this. So RH, again, we're not worried about these long-term movements. This is just to show you that the stock is a real mover. Okay, and we anticipate that it's going to move through its earnings event. Greater than 18%. All right. Now, FC. All right. Now, FC you might not be familiar with, but it is Franklin Covey. Okay. I don't know really how to describe the company. I just use their products, day planners and calendars, and the cover, the physical covers to them, and all sorts of stuff that they have produced over the years. And I know they've morphed their company into other areas like technology and everything, but anyway, not to get too into the weeds there, but Franklin Covey will have earnings on Wednesday, April 2nd, and that will be after market close. Now here, again, a big potential mover. Expected move is pricing in right now greater than 14%. Now, here's the interesting thing. You notice back here on their December earnings cycle, the estimate was greater than 12%. And now it's greater than 14%. Why? Well, because this was a pretty big thump to price back here in December. And the expectation then kind of grows. And they're expecting these big moves. And therefore, the estimated moves will increase or decrease over time. And we're seeing the estimated move here for Franklin Covey being greater than 14%. Now, this is, as you see, it's a $27 stock. This would be much more appropriate. The debits here are going to be between $400 and $600, much more appropriate for smaller accounts like a $10,000 trading account, etc. And again, it's all about preserving capital, risking as little as you can, and still having that opportunity and that positive expectation for your trade. Okay. Now, lastly, what we're going to talk about here is Lamb Weston. Always one of my favorite stocks. They are into potatoes, specifically frozen potatoes. Okay. And how exciting can frozen potatoes be? Well, they have an estimated move greater than, oh, that should be greater than, sorry about that. They have an estimated move greater than 15%. Okay. They're expecting a big move for Lamb Weston. Now, on their last earnings cycle, look at that. It was greater than 12%. But because this drop right here back in December, okay, that is a 20% drop. All right. The expected move went from 12% now to greater than 15%. And I do like this little consolidation here that the stock is having right before its earnings announcement. So this could be a very interesting stock to watch. And again, if you didn't think frozen potatoes could be exciting, well, guess what? Lamb Weston is your company to watch in and around earnings, because it can be a flyer. Okay. Or it can be, yeah, either way, up or down. We don't know. That's why we trade straddles and strangles around these positions. All right. So one more look at our list for this week. Again, quiet period that we're going to go through this week and the beginning of next until we get into the beginning of the earnings season, which will be on Friday, a week from this Friday, as some of the banks like JP Morgan, BlackRock, Wells Fargo, they all declare a week from this Friday. And then we get into the week of Easter. That week will be a 4-day trading week, a little quiet. And then, boom, we are in the heart of earnings season, and we have hundreds and hundreds of companies declaring each and every day, starting the week after Easter. So lots of good stuff to come each and every week. So let's talk about the trade that we did from last week, because we always provide a trade here on Earnings Call, and we always follow up with it to see how we did. So last week we did Paychex. This was going to be a quiet stock. This is a risk graph combined with the stock chart, okay, of the strategy. And what we were hoping is the stock, through the earnings announcements, will stay in between those light blue lines. Okay, those horizontal light blue lines. We want the stock to stay in between those lines through the earnings announcements. Now, the only problem with Paychex is they have traditional options expiration. Okay, they don't have weekly options. So options here will expire on Friday, April 17th. Excuse me, that's Thursday the 17th, because Friday the 18th is Good Friday. The markets will be closed. So it will expire on Thursday the 17th of April. And we wanted the stock to stay in between those break evens. So the earnings announcement came out. Let's take a look at how the trades is doing, because it is still open. All right. And we saw a little gap higher in the stock as we move to the next image, and we see the stock then consolidating here at this upper level. Okay. So it isn't really testing the upper break even in the trade yet. Okay. But we would like to see a little bit of a pullback in the stock. This seems to be very uncorrelated with the broader market. In other words, Spider, for example, was down big today and was well off of and suffered on Friday as well. But look at this stock. If you can see the stock price, the stock was only down just a little bit on Friday, and today is trading a little higher. Crazy. But we've been in it a week. We have about a $20 profit at this time. And as long as the stock consolidates up here, and the last time, as you can see, we were up here at this price, we did pull back and go down to the 145 level. Would like for that to happen. That would be ideal. But we still have a couple of weeks left in the trade. So we're going to stick with this and keep our eye on it and see how it does. But so far, so good. We did have that quiet earnings announcement. The stock did gap up just a little bit. That's not uncommon, but still a single-digit performer through the earnings announcement. So let's get to this week's trade. And if you listen to me closely, you probably can guess which company we're focused on this week. It is going to be Lamb Weston. All right, with our trade of the week this week. The stock is nicely priced. You know, it's right there around a $50 price target. Love stocks that are in that $50 range. And oftentimes we can find good deals on debits. Now, the price, when I priced this out, it was around $5.50, which is $550. very appropriate for a $10,000 and higher trading accounts. Okay. I can tell this is a strangle because the flat bottom that we have there on the risk graph, the black part of the risk graph. All right. When that's pointed, that would be a straddle. When it's flat like that, it's going to be a strangle. All right. So different option prices, a call and a put, different strike prices with the same expiration date. All right. And here it looks like we're using the 55 calls and the 5250 puts. And that would be our strangle because two different strike prices. All right. And the debit being around $550. So that is our trade of the week. Again, Lamb Weston expect to be a big mover, greater than 15%. And we're pricing in this. We're getting a pretty good pricing on our options. And we would use a straddle or a strangle for that particular stock. And in this case, this week, we're using that strangle. All right, so that's it for this week. I have a link below if you'd like to see how we trade some of these breakout candidates. Okay, they can be wild at times, and they're a lot of fun to trade. Just go to ewotrader.com/straddle, and you can get a copy today, and we would appreciate it. And we will look for you next week as we head into the next earnings cycle and the excitement of those financial stocks that we'll declare that week. And we'll talk about them all on next Monday. So take care. Have a great trading week this week, and I'll see you next time.